Hey everyone! In today's video, we're exploring the VWAP trading strategy. We'll go through the entire process, from explaining how the strategy works to optimizing it using Freqtrade, an open-source trading bot, and finally running backtests to see how it performs. If you're looking for a complete, beginner-friendly Freqtrade tutorial, be sure to check out the link in the description below. Before we dive into the strategy, let's start by breaking down the key indicators we'll be using. 1. VWAP stands for Volume Weighted Average Price. It represents the average price of an asset weighted by its trading volume throughout the day. In this strategy, we'll be using a rolling VWAP, which continuously updates over a defined window of time. For our setup, we'll use a 200-period window, helping us capture evolving market trends more effectively and filter out normal price fluctuations. When the closing price is above VWAP, it suggests that buyers are in control and the market is in a bullish phase. When the closing price is below VWAP, it indicates that sellers are dominant and the market is likely in a bearish phase. 2. ADX stands for Average Directional Index. It measures the strength of a trend, regardless of whether the market is moving up or down. We'll be using ADX to confirm trend strength before entering a trade. When ADX is above 25, it means the trend is strong, either bullish or bearish, and price movements are more likely to continue in the same direction. When ADX is below 25, it suggests the market is weak or ranging, and trends may not be reliable. Next up, let's talk about the EMA, the Exponential Moving Average. The EMA is a type of moving average that gives more weight to recent price data, making it more responsive to current market movements compared to a simple moving average. In this strategy, we'll be using the 200 EMA as a trend filter to help us identify the overall market direction. This means we won't rely on other signals alone. We'll also use the EMA to confirm whether the market is trending up or down. We'll only take long positions when the price is above the 200 EMA, indicating a bullish trend. And we'll only take short positions when the price is below the 200 EMA, signaling a bearish trend. Now that we understand how each indicator works, let's walk through how we combine them to identify trade setups and generate entry and exit signals. To enter a long position, we wait for all of the following conditions to be met. 1. The closing price has crossed above VWAP. This signals that buying momentum is increasing, and the price is starting to move higher. 2. A DX is above 25. This means the trend is strong, and there's enough momentum to support a potential move higher. 3. The price is above the 200 EMA. This confirms that the overall market trend is bullish, and we're trading in the direction of that trend. Once all of these conditions are satisfied, we enter the long trade on the next candle. After entering, we set the stop loss just below the low of the signal candle. To give the trade some breathing room and avoid being stopped out by normal market fluctuations, we subtract 3 times the average true range, ATR, from the closing price of the signal candle. For our take profit, we use a 2-to-1 reward-to-risk ratio. This means that once the price hits our target level, we exit the trade and secure the profits. To enter a short position, we wait for all of the following conditions to be met. 1. The closing price has crossed below VWAP. This signals that selling momentum is increasing, and the price is starting to move lower. 2. A DX is above 25. This confirms that the trend is strong, meaning the market has enough momentum to sustain the downward move. 3. The price is below the 200 EMA. This shows that the overall market trend is bearish, and we're trading in the direction of the larger trend. Once all of these conditions are met, we enter the short trade on the next candle. After entering, we place our stop loss just above the high of the signal candle. To give the trade some room and avoid being stopped out by normal market fluctuations, we add 3 times the average true range, ATR, to the closing price of the signal candle. For our take profit, we use a 2-to-1 reward-to-risk ratio. That means once the price moves twice the distance of our stop loss in our favor, we exit the trade and lock in profits. Now that we understand the strategy, let's move on to optimization using Freqtrade. We'll be testing on the 1 hour time frame and splitting our historical data into 2 sets. In sample, 8 months, used for tuning and optimizing the strategy. Out of sample, 4 months, used to test the strategy on unseen data and see how it performs in real market conditions. The key parameters we'll focus on optimizing include trend filter enabled, whether to use the 200 EMA, VWAP cross window, how long the cross above or below VWAP remains valid, since ADX may not reach the threshold immediately. -ADX threshold, the minimum ADX value to confirm a strong trend. Risk ratio and ATR multiplier. Define the stop-loss distance and the reward-to-risk ratio, which control trade management and overall strategy risk. We'll use Freqtrade's HyperOpt feature to find the best combination of these parameters for maximum strategy performance. Once the optimization is complete, we'll run a full backtest to evaluate how the strategy performs using the optimal settings. All right, let's take a closer look at the backtesting results. We tested the strategy on near perpetual futures using a 1 hour time frame over the past year with the optimized settings. Here's what we observed. The strategy achieved a total return of 270%. By comparison, the market itself saw a return of around -49% during the same period. The maximum drawdown was 21%, which shows that while the strategy did experience some retracements, it effectively managed risk and maintained overall profitability. Next, we'll review a visual summary of these results. The strategy was optimized with 8 months of in-sample data and then tested on 4 months of out-of-sample data, ensuring it performs reliably on unseen market conditions and isn't just curve-fitted to historical data. If you'd like access to the full strategy file, along with the complete step-by-step Freqtrade tutorial, it's available to supporters through the link in the description. It's a great way to support the channel, and in return, you get everything you need to build, run, and customize this strategy on your own. There's also a pair-optimized version, which allows you to apply the strategy across multiple trading pairs, each with its own optimized parameters for improved performance. If you found this video useful, remember to subscribe, enable notifications, and share it with others who might benefit from it. Thanks for tuning in. See you in the next video.